And good evening. This is the Eye of the Storm podcast combined with the Elliott Wave update for the S&P 500, the NASDAQ 100, a quick look at the Treasury market. So we look at the 30-year bond, the 10-year note, and I'm going to finish up by taking a quick look at gold because I've been promising to do that. So this may be a little bit longer than you would be expecting, but we're going to combine it all together, put it together for one update. Starting here with the S&P, and we're looking at the futures market right now. Friday's activity did push the market, and we saw the market reach its lows in that extra added hour at the very end of the day between 4 and 5 p.m. Eastern, and the market closed on the lows at 42.4450. Now, the wave pattern would suggest that we should continue to drop. I have placed a 3 down here as if because I can basically start to count 5 down. It looks like it probably could be a third in place, and then we start with a little bit of a bounce. If we don't, then that third obviously will be moved, and we are going to continue to slide. Now, here's the caveat. I'm going to go over real quick, and let's take a look at the SPX. SPX 4,200. There is support. There is what you might want to determine a line being drawn in the sand there. And they're doing it with the puts. I'm going to first take a look at tomorrow. And we have that 4,200 strike, 10,000 traded on Friday. Not sure what the open interest will be going in to tomorrow's trade, but large sum traded on Friday at the 4,200 strike. Now, what we also have, we can come down here to the November expiration. And again, we're going to take a look at that 4,200 strike, and we see, 38,000. We got a little bit of a line in the sand for right now up into November expiration. Now, not necessarily going to call that a put wall, but it does seem to present itself as such. So did the put wall or the what was the call wall has now turned into a put wall. So we had a call wall of 4,300, got a put wall of 4,200, both delivering the same type of a message if broken. So again, that's going to end up being pretty strong support for right now coming into tomorrow. So again, what I'm hearing is that, we got Piper Jaffray, and I think I also heard it from Michael Hartnett from Bank of America, in that the market they're considering the market's oversold. Or a lot of these individual stocks are pretty oversold. Now, okay, cannot disagree with that. We did have some pretty hard selling and quite a few of them on last week. Tesla in particular. So a bounce would not be out of the picture, but they're expecting that with that 4,200 support in the SPX being in their views right now pretty rock solid and possibly able to hold the market and turn it higher on an oversold reading. We've seen this play before. We've seen where they come in and they just start buying, and they actually will start in globex, which begins in about 25 minutes. So we have globex beginning in 25 minutes. Are they going to start by just buying it? Are we going to gap higher based on all of this? And will it last? So again, if. But right now, the count is not necessarily going to agree with that, but not me kind of show you possibilities here where it could. Again, there's not a whole lot of room between where it closed and the low for minor wave 1 at 42.07, we'll call it, and 4,200. So if the market were to come down here, here, if it got to where minor wave 1 ended, I was because I can count 1, 2, 3, 4, 5. I can count 5 down, looking for that wave 2. We got it. We got the wave 2. So I don't have any reason just yet to delineate away what the Elliott count is telling me. And the Elliott count is telling me, and you can kind of see, hey, that looks pretty third wave-ish. How? Well, look, 1, 2, 3, boom, straight down, 4 days in a row. Strong downside. I know in between we did get some pretty solid rallies, but in terms of just looking on a daily basis, strongly lower. And there at the very end of the day, On Friday, the market broke the 200 simple moving average, the daily 200 simple moving average. Now, that could suggest that they're just going to line up with sell orders. Now, that may happen at start of globex, or they could try to hold it, push it back up above that level, right? Which is right now at 42.33. So it's not that it broke a whole lot. It broke less than 10 points. So they could take it back up there, but they got to jump it. They have to really bring it up pretty quickly if they want to avoid any kind of landslide type moves. That's my opinion. That's in the cash market. Cash market won't trade until tomorrow morning. So let's go over and to try to develop the equivalent here in the futures market. Let's open that up. So we have this low, right? We got about 20 bucks premium in the future over the cash. So at 42.34, which is the low, or actually it's 35, which is the low of minor wave 1, that would be equated to approximately 42.15. 4,200 will be 42.20 in the futures. So if we start really drifting below 42.20, we're suggesting that the market is going to open below 4,200 tomorrow. Now, if it gets down there but comes back, well, it keeps the whole play in play until tomorrow. Now, what am I looking at here on the daily chart? Well, we've already broken the 200 period moving average, simple moving average. That happened on Thursday. So we got a double. It broke, we slid, it came back in, we slid some more. So, well, is this enough for a wave 3 to be complete? Let's take a look at the daily chart. The hourly chart. And we got to come up and so we got a 1, 2, and then we got 1, 2. I don't know. It just kind of is a little bit not sure. Even from here, 1, 2, 3, 4, 5, maybe. But if we get a 4, what are we looking? Maybe it comes back up into here, 42.50, 60, up into that area, and then drops again. Or we just start heading lower now. All of these are pretty strong possibilities. Right now, we got that they're indicating initially 42.47. So they want to take it up just a little bit before this gets itself anywhere. Now, that could all change in a heartbeat. So what the wave count that I have is basically telling us, and let me open this up, is that we should continue lower. Now, let's just kind of pull this into speed. We have intermediate 1, intermediate 2. We're inside the intermediate wave 3. We have minor 1 and minor 2 in hand. We're in minor 3. Minor 3 has got to be bigger than minor 1. That doesn't happen until we're down here at 40.67, basis the futures market. Then they're equal. What we've seen some very strong downside, but not any that just go. They've started them, then they rally it back. They started it, they rally it back. They did that several times on Friday, several times on Thursday. I'm talking about that nonsense doesn't exist. They just go and they're gone. And there will be enough market pressure in order to do it. Now, again, everybody wants to rally around the Fed. What the Fed? Now we're marketing in, or we're also pricing in that the Fed is going to pause, not raise the rate at the end of October, November 1st meeting, and that they may even pause at the December meeting. Now, that's all very possible. But how about the fact that maybe the Fed is now truly thought they had control, but do they really? So is it really about interest rates and what the Fed may or may not do with inflation? Or does the argument start to turn towards our current fiscal policy or lack of? So again, what truly can affect the market is going to step aside from like, well, we've got all this support there, the market's oversold, we should bounce, to the market might be oversold and we're going to continue to sell because of the current situation going on within the government, the current situation going on with the Israel-Hamas conflict, the current situation going on or building in China and the South China Sea. we have some hot spots. Ukraine, Israel, South China Sea is potential where we could see flare-ups. And I can't tell you that maybe the plan isn't to stretch the United States militarily and then really kind of wreak havoc somewhere. I don't know. I don't think any of us do, nor do I want to speculate on that. But what I will tell you, when I take a look at gold, gold continues to rally. Why? Well, gold doesn't like uncertainty, and gold doesn't act very well when we have the threat of an expanding war anywhere, or just as building tension. Now, when we're dealing with the stock market, when we're dealing with the equity markets and where these indexes would go, a lot of it is technical. But at some point, we're going to have to deal with the fact that reality is going to flip the technical picture around a little bit. And that might start now. I don't know. Again, what I'm telling you is if we're inside this third and we're inside the third, and if this is minute three, but again, I'm telling you, I'm thinking that it's either going to be the minute three, but if I can count 5, the other choice would be, I'll show you what the other choice would be. And I discussed this before. You can leave it right there, but just put it italicized. It is minuet wave 1 of minute wave 3. That would speak volumes and raise the danger flag. I got to tell you, that would be like, uh-oh, what's going to happen? So I've left it to 3 just because, but I'm telling you, I'm going to change it right now because I'm thinking like, no, there really needs to be, if we're going to deal in Elliott, if we're going to deal with the technical picture, if we're going to deal with what the market can do, then it really can turn and just head south. Just go. Just go. And we have enough out there. I understand we got earnings. We got earnings coming next week. We have AMD on the 31st. That's the week after. We got Apple the week after. Who do we have next week? Intel on the 26th. We have Meta on the 25th. We have Microsoft already has. And that's, I think, there are big guys for next week. Then we have Apple the week after, AMD the week after, Amazon on the 26th. So we have some bigger players towards mid to later in the week, next week. Now, what can that do here? So everyone's still expecting that they're going to blow the doors off. Well, what we've already seen is that they come out, the earnings are okay, the earnings are fine, because, well, we had Netflix, and they just kind of like, we're going. But see what happened next by the end of the day? Expiration over, we don't need to hold on to 400 anymore. So what happened because of the earnings, as I said last week on Thursday, they're not going to give this up until after expiration. We'll see. We'll see now what happens. They did start to give it up, and they started to sell it after the close. So that'll be interesting, because what happens then is the same thing that happened in Lam Research, where they came out, they had great numbers. The numbers are good. They were even projecting out into the next quarter that they expected to have a decent quarter, and they sold the stock. Well, and what happens if we see that in Apple? Apple comes out with a fairly decent quarter, but they're dealing with any China problems, they're dealing with this and that, and their expectations may be that they might not make as much, but they should still do okay, and they sell it. So a lot going on, and I need to see that reflected here. And I need that, for this type of account, I would like to see it to kind of come into play and start to go down. Now, here's our fibs again for the S&P for the futures market. On an intermediate degree, I am looking at 2.618. And that's at 38.42, where intermediate wave 3 would be 2.618 times the length of intermediate wave 1. That's the next one that actually fits. 1.618 is 41.30, and that doesn't fit because of the internals. Now, minor wave 3 100% of minor wave 1 at 40.67. I'd look for a little bit more. Then we get a minor 4, and a minor 5 brings us down into here. That's still what my projected path comes in, and that's based on fibs. So, and again, if we get down this far in intermediate degree, we have primary C 0.618 at 38.82, and that really doesn't come into play until we get 33.87, where primary C is equal to 100% of primary wave A at 33.87, and that fits. Now, I don't think we're going to get all the way down to here. Not now. Not now. I think that we're going to find some fairly strong support between 33 upper sides, 33.85, 33.75, down to about 3,200. And then we still have that 29.80 solid, big picture support at 29.80. And that's going to be basis the SPX. So depending on the contract, depending on, how much premium, that could be anywhere from 3,200 down to what, 3,100, 33,000. So still quite a bit to go, but not the end of the world, not the end of, Jesus, we're all going to die. So, but I do suspect that what's going to happen relatively soon, because we're inside the third of the third of the third, that we start to give it up. Now, that might hold out one more small rally. So what we got is intermediate 1, intermediate 2, minor 1, minor 2, minute 1, minute 2, minuet wave 1, minuet wave 2, and then it rolls. Okay, so taking a quick look at our moving averages, we saw that it's already broken here. Now we're looking for the 20, which is pretty dang close, to come down and break the 200. That is, I think, can throw a little bit more in there. Right now, you see they're starting to perk it up. Now they're going to try to open the S&P up 6. They're trying to get away from that 4,200, and I think enough people read the Piper Jaffray, they read Michael Hartnett, and they just kind of come in and they go, "We'll buy it now." So again, just be aware. They may try to buy this thing up, but if they do, here's the trick: if they come in and think they're going to buy this up, it has to break 44.30, and it has to do it pretty dang quick. You want to really spook the market and get them all like thinking something different. Like, okay, everything's rosy right now. Fed's going to pause, blah, blah, blah. That's not going to hold water for very long. I got to be seriously honest with you. The reality is there as well. So you might catch some, and they're going to come flipping in here. But I just don't see it going deeper without evidence of that occurring, without evidence that fiscal policies under control, without evidence that the government is back to firing on all cylinders and getting their work done, without evidence that this skirmish, this war that's now in the Middle East is going to be short-lived. If you get evidence of all that, buy it. All right, so let's move over and let's take a look at the NASDAQ. NASDAQ as well got the same story. In fact, we came down, smacked right into support. 1.618, that would be for this minuet wave 3, and 0.618, which would be for the minor resting points. Maybe a pause here. Let me just pull this down. Let's go to the 4-hour chart, open this sucker up and take a look. So we kind of came down nice, but see here, we got them. Get out of the pool, little pullback, get out of the pool. Now, I think we might need more, but we might get a little bounce. Might get a little bounce. And right now, they're looking like they're going to open it up 10. They're going to at least try to open it up 10. So they get it up at 59. There's going to be a resistance now. So resistance is 14,680. 79.80 right in here. And if it gets up to there, is that going to be a little 4? Meh, could be. Otherwise, we run the risk of we kind of come all the way back up to 14,855-ish, which is actually where the last rally, small rally phase took us on Friday. Actually, Thursday's globex. Wow. Okay, so Sunday's globex, but that's a possibility. I really do not suspect that any of this is going to take hold. And this narrative like, oh, we're oversold. I mean, yeah, here we have the 4-hour chart on the NASDAQ, and it is oversold. Markets can stay oversold or overbought for a long period of time. So a lot of it, they're going to have to back it up with a little bit more than just the fact that, oh yeah, well, technically we're oversold. We need to go up and go up big. So as I said, there is that alternate count. Actually, the alternate count for both of these markets would be that this is an ABC, right? I cannot for the life of me understand why people would think it's an ABC and it's a 4 within this rally. Because look at the size of this compared to the size of this. It is gigantic. So what I would consider as an alternate is that it's an ABCX. So the B gets moved. It's an ABC up, ABC, it's minor degree ABC down, intermediate degree X, and what we got going on is a secondary ABC. Now, that may or may not, if it's in play, we're so close to just breaking below this low, right? That it's like, okay, how high can it get? So let me go back down. Let me go back down to the hourly. If we're looking at this thing, and what is this? Have we already done? If this is the an X, A, B, and now we're going to do a rally and a C, we'd be done. We get back to 15,500. And again, what's going to support it? What's going to support the move? More buyers and sellers? Oh, the Fed's going to pause, or they're going to start cutting. Bull. I don't think the market's going to start falling for that. They're marking this up a little bit. Now we got that opening in about 7 minutes. Might just be done and smack and run. We'll see. But here again, if we're getting a little 4, okay, we get up here, we get up in a little bit, and then we put the 4 in, and then we continue down. Now let's take a look. 4-hour chart. Let's open that up so we can see what our fibs are looking like coming off. We have, here's the intermediates. Intermediate wave 3 will equal wave 1 at 14,396. Going to be looking for more, obviously, with wave 1 being as long as it is. So what are we looking for minor wave 3? Minor wave 3 would be equal to 1 at 14,197. I'm looking for more. So I want it to go a little bit deeper, and then we get a 4 and a 5. That intermediate wave 3, 1.618 at 13,500. Okay. Minor wave 3, don't know if it needs to go that deep. Somewhere in between a 4 and a 5, right? Minute 3. Minute 3s are going to come in this way. That's the minor. The minute, and then a 4 and a 5 getting into here. Minor 3, minor 4, minor 5 coming into here. But it just gets too congested. But it could be the ticket. It might just be the way that it all unfolds. We can't know. But essentially, I continue to feel that cycle A, primary wave C, ends up down here. Which means if we're in primary C now, 1, 2, 3, 3 should bring us pretty dang close. So I am still looking for some serious damage to be done to the downside. And whether or not they determine that, they're going to take it up today and we're just going to keep going. No. Please don't try to jump that far ahead that it's like one day changes the whole picture. It doesn't. We have no evidence of anything other than we got some serious stuff that this country and the world are having to confront. We'll see. Okay. Now you see that the NASDAQ has suddenly just gotten marked all the way down. Going to be interesting. We'll see. Now, I want to go over and take a quick look at the bond market because people have been asking. Bond market, let's just go here. We're on the 4-hour chart. I have marked it as complete. We got down and we smacked. Now, this is for the minute fifth wave, and that's that white one right there. We hit the 2.618, where minute wave 5 was equal to 2.618 of minute wave 1. Hit it on the nose on Friday and then jumped up off of it. Now, what I'm leaving open is the seriousness that it's not so much about is the Fed going to pause, is the Fed going to stop hiking, et cetera, et cetera. It's more on fiscal policy. And that's really what the focus is turning into. The fiscal policy right now, the ability for our government to avoid an additional shutdown come mid-November. Folks, we are a week away from the start of November, which puts us within 2.5 weeks, 3 weeks of the government shutting down. And thus far, we have a House of Representatives that's unable to elect a speaker to get the work done, to introduce the bills, to get them passed, to get them sent over to the Senate, et cetera, et cetera. What if it takes another week? What if they don't? What's that going to do to the credibility of the U.S.? What's that going to do to our bonds? What's that going to do to the rating agencies that rate the country? What's that do for fiscal policy? They got sitting, waiting for them that, hey, we need $1 billion to send to Ukraine. We need $1 billion to send or more to send to Israel. We need X amount of dollars for this. We need this. We need that. Fiscal policies in hot water. Let me just say that. And the United States is kind of going to get its back up against the wall, and that we still have to do it. The only way we're going to do it is we borrow. So the government borrows via bonds, and they're going to have to do it at a higher rate. And that's going to shove the dollar, and that's going to shove this, and that's going to shove that. And all we go off to the races. One feeds the next. Now, let me just take a look very quickly at this 30-year yield. 30-year, don't need to on that high of a chart. I can come down to the hourly chart and put this into a line chart. You can see we've been above 5%. The 30-year bond above 5. And I think that's going to head back above 5%. Let's just see where they plan to open these down just a little bit. Not too much, down just a little bit. So again, now look at them. Okay, we're going to open this up 20. I love these guys. They have no clues anymore. But they got about 50 seconds and we'll see. So, but I think that we have the potential here again. I'm leaving both things open. Is it possible that yields have topped? Yeah, it is. It is. And we start into that, what I've been looking for, a midterm or mid to short to a near to midterm counter trend decline in yields, rally in the bond prices. So I'm looking for that. I'm looking for that to begin. And so, but we have to leave open that we might have another serious little plop up higher, even with the Fed saying we're going to pause. We're now going to have to focus on fiscal, right? And so what we have going on is possibly of it that, and that's where I'm showing both. This was as if it ended here. And then and if we have one more move, then we've got 5.189, 5.24. So 5.25 becomes the next target on that one. Now look at somebody jumped in. And this is what I said we got to look for. This is how they get this going. They jump in now and they hold it up until tomorrow and they get all that energy going. I'm going to say I think that's what they're going to try to do here. So they come in, they get it, and they push it back down. They come in, they get it, they push it back down. We'll see how this all works out. So here again, we have the bond market going in the other direction. How long do you want to play this game, equity market? How long do you want to play this game without looking at these guys here? They're driving it lower. So again, I'm leaving that open. So here we have it as well, where we have one more drop, and we have that support at 105.080 and all the way down to 104.230. Now, We have outside, we've got larger support at 104 down to 103.25. So basically the 104 area. And that's possible. That can happen. So again, what they want to do in the equity markets is going to be totally up to them. But the bond market is not necessarily agreeing. And here's something interesting if we take a look at the 10-year yield. Look at that. Going to try to get back now. The 10-year yield is going to go over 5%. And I've left that door open. And here's the fibs that go along with it. Look at the 3 and the 4. These are small, but 3 and the 4. And we kind of come up here. We get above 4.972. We got up to as high at 4.99. So that's like a spit to 5%. And then we have 5% 07. So we still have it right there. But then we have 5073, 5123. These are alive and well in the 10-year note, depending on how hard they want to drive the market. Okay, so I want to take a look quickly at gold, and then I'm going to finish this up and get it posted for everybody. So we have gold. Let me take this off and go over and put it back on a bar chart. So gold beginning to come down, actually come down quite a bit. It's pulling back in an ABC. It's hitting support. Actually, it already did, believe that. Wow, how about that? It came down and it hit that support at 1970, got down to 71, and they're rallying it back. Wow, that's really interesting. Okay, so we get this ABC done, and now we begin to rally again. So let me go out to the 4-hour chart in gold. Gold does not like conflict. So it's really kind of looking at this whole thing and like, wow, we have an escalating war scenario. We have a really lame House of Representatives unable to do their business. So there's a lot of uncertainty, and gold traders don't like uncertainty. So the deal is, it's like it pulls back, right? So it's a pretty strong rally. We pull back. We reach some support levels. We have additional support at 1944, and then we have it at 1935. But the ultimate would be is that we turn and we hit the next target, which is 2061. Ultimately, if we're inside this minor fifth wave, and I do feel that that's where we are, and the minor fifth wave is going to be completing. I have to go out to my weekly chart. It's wow. One more, because a much bigger picture. Okay, so there's the primary 4. Intermediate 1, intermediate 2, we're completing an intermediate third wave, and I think we end up about 2200 to finish that up, and then we go into another fourth wave. Now, maybe not. It can get as high as 2450. Fifth waves in the precious metals are the ones that kind of go kablooey and go right off the hook. They're really kind of pumping this stuff. That's the way they do it. They're all convinced, overbought, it's oversold, just go in and buy it. And now they're just going to push it up. It's because they're damned if they do, if they're damned if they don't, but they're going to give it their good old college try. And it fits. Back to gold. Those are the story. So again, how you want to play it, that's all up to you guys. But I think eventually gold will get substantially above 2,000, making new highs. So right now that level is at basically 2,100. And then we start into the new high territory, and we'll see what the structure tells us. All right, that's going to be it for today. Again, combined a little bit of everything for us today. Tried to keep it down, not necessarily too long. And so the next Elliott Wave update will be on Monday, October the 23rd.